more fallout from those risky mortgages that set off Wall Street's recent sell-off. Poor credit customers defaulting on their loans, causing a wave of foreclosures. But could this shakeout actually turn out to be a good thing for the housing market? Wayne, Jonathan, and Dagen are back, and we're joined by John Sauro. He is the president of the North Atlantic Mortgage Group. Okay, John, you say that there's a silver lining in this whole mortgage mess. What is it?
Wow, I mean, what's going on here? I mean, we're not going to go to hell in a handbasket, are we? The interesting thing here is that as this is happening, the money's coming out of stocks, going into bonds. That's bringing the rates lower. The Fed's probably going to lower rates as well, and this all bodes well for the real estate market.
So it's a big virtuous cycle all over again.
I believe so, yes.
Wayne, you know a fair amount about real estate yourself. What do you make of all this subprime mess, or junk mortgage mess, as I like to call it?
Well, this is a timing issue. It's not that that we know in real estate cycles, as I've said before, what's going on right now is a price adjustment period. We haven't fully gotten into that yet, so we've got a ways to go. This is just we're probably halfway through this cycle. In other words, as I said, we have the absorption rate stretch out now to 7-8 months. Then you're going to have a price adjustment. That's got to go on for a year. Then you got to go through the foreclosure stage. So this is not necessarily good, but this is part of it. It's just an indication of it. Subprime mortgages, etc., are going to go bad, and we're going to have more of this, and it's just a sign of what's going to take place in a natural cycle of housing.
And it is natural, Wayne, and it's a good thing, because if some of these subprime lenders go bust, which they have been, it gets rid of bad business practices, maybe excess risk taking, and can remove some of the boom and bust cycles from housing in the future.
Jonathan, you agree? This is the market at work?
Well, of course it is the market at work, Terry, but I don't think it's good for the asset class in general here. I mean, you know, stocks like Lend and NFI and NEW, I mean, you don't see stocks lose 90% of their value in 2 months very often. It's kind of a historic move. And what worried me this week is that I started seeing it spread to some of the financials, some of the big S&Ls, Washington Mutual. So it doesn't, you know, to be honest, I think it's a harbinger of tough times to come for real estate.
It did spread, and to the brokerage firms. John, that's the concern out there among stock owners, is that this time is different because there's so many of these risky mortgages and so much lending upon lending. I
don't agree with that. There's not so many of these risky mortgages out there.
Well, there's almost $1 trillion, I think, worth of them.
Well, maybe so, but here's the point. You've got 14% of subprime that was done last year. There's still 86% of A paper out there that's moving along finely. I mean, I think this is very overblown, and I see underwriting standards day in, day out. I don't see any banks that we deal with, which is in excess of 120 different banks that we sell loans to, that are doing loans that are for people who that cannot pay their mortgages. We don't see those kinds of loose standards.
Wayne, is that what you see, or are you concerned that maybe this time's a little different?
Absolutely not. Listen, the mortgage payment is only part of it. When somebody's insurance rates triple or double, or somebody you know, cannot get insurance, and the mortgage requires that they get insurance, that stops the whole process. So you've got a lot of other things. Taxes have gone up. Property taxes have tripled in certain areas. This is just the beginning. You couldn't be more wrong. This is going to spread to even good mortgages, and they're going to get hurt.
But I'm with John that with rates going down, money pouring into bonds, that's going to be good for the global economy, and we will not have a recession.
Absolutely, and I got to jump in and tell you, there are solutions for these people. It's not just subprime that you're talking about. You folks are also pointing to the A market, like companies like Washington Mutual. There are solutions. Refinance, lower the payment.
All right. Okay, we're going to leave it there.